Welcome to the tokenized economy. Here is today's explainer on the 4 models of tokenized equity markets.
All right, so in a previous explainer, we really dug into why tokenization is such a huge deal in equity markets, right? Well, now it's time to take that next logical step. We're moving from the why to the how.
So what does this actually look like in the real world? When we talk about bringing equities on chain, let me tell you, it's definitely not as simple as just flipping a switch.
Yeah, the very first thing you've got to get is that there isn't just one magic solution here. Nope. Instead, what we're actually seeing is several pretty distinct models starting to pop up. Each one has its own unique way of bringing these assets into the digital age. Okay, so how do we make sense of all this? A really helpful way to think about these different approaches is to see them as a spectrum of innovation. It's not about one single design. Thinking of it this way helps us see all the different strategies that are being tested out in the wild right now.
And this spectrum, it really has 2 extremes. On one end, you've got the approaches that are designed to fit, neatly within the market structures we already have. But on the other end, we're seeing these much bolder models that are exploring completely new ways to organize markets from the ground up. So right across this entire spectrum, from the super traditional all the way to the revolutionary, we can pinpoint 4 main models that are really starting to take shape. So let's break them down one by one. Yup, you heard that right, 4 distinct models. First up, we have the CSD model. And this one, well, it's definitely the most conservative approach. Think of it like this. Tokenization is just a new digital layer that sits right on top of the existing systems, the ones that handle everything after a trade happens. The tokens act as a digital receipt, basically. But the actual legal ownership, that's still firmly anchored in the traditional system. Okay, next up is the broker-dealer model. In this setup, you have financial intermediaries who issue tokens, and these tokens give you economic exposure to equities. Now, here's the key difference. These tokens are usually just contractual claims. What does that mean? It means you get the financial upside or downside of the stock, but, and this is a big but, you don't actually legally own the underlying share itself. All right, moving further down the spectrum, we land on the exchange-led model. And just like the name says, this is all about integrating tokenization with the regulated trading venues we know today. The exchanges, they stay right at the center of things for finding the right price. But it's the back-end processes, things like settlement and asset servicing, which is just fancy talk for managing the asset over its lifetime, that's where things start to get a whole lot more efficient. And finally, way over at the far end of the innovation spectrum, we have the issuer-native model. This is by far the most direct approach. Here, a company literally issues its shares as tokens, right on a blockchain from day one. In this model, the ownership and the power to transfer that ownership is baked right into the token itself. Okay, so there you have it. Those are the 4 big models. Now, let's kind of zoom out for a second and see how this all fits together in the bigger picture. Putting them all side by side like this really makes the differences crystal clear, doesn't it? You can just see how each model, from the CSD all the way to issuer native, takes a totally unique approach and has a different relationship with traditional finance. It's a fantastic way to visualize that whole spectrum we were talking about, from being totally anchored in today's world to being built on something brand new. So what's the big takeaway from all of this? The really crucial thing to get is that each of these models represents a different strategic choice. It's all about striking a balance, right? A balance between pushing for wild innovation and, well, having to deal with the realities of existing market structures and regulations. There's no single right answer, at least not yet.
And even though the paths are really different, some are super cautious, others are pretty radical, they're all pointing in the same basic direction. And that direction is creating more efficient, more accessible, and, more programmable equity markets for all of us.
And believe me, we are definitely going to keep exploring this stuff. In our very next explainer, we're going to do a deep dive into that first one, the CSD model, and really look at how it fits into the financial infrastructure we have today. You are not going to want to miss that one. So make sure you subscribe so you don't miss out on more short explainers on blockchain, tokenization, and the financial markets. And hey, if you have any questions or maybe some topics you'd like us to tackle, just drop them in the comments below. We'd love to hear from you. We'll see you next time.